with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, China's new negative list for foreign investment removes all access restrictions to the manufacturing sector. And we will also take a look at who are on the list of China's top 500 enterprises. And now let's begin with our top story. China will lift all restrictions on foreign investment in manufacturing sector in the country's latest version of the negative list. That will also bring the total number of restrictions down to 29. The new version of the negative list for foreign investment access will take effect this November. The National Development and Reform Commission said the new list is part of the nation's efforts to further open up. So what are the new changes in this negative list, and what does it mean for China's further opening up? For more on this, joined us on the line now, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Andy Mark, Senior Research Fellow at the Center for China and Globalization, and also Yan Liang, Professor of Economics, Willamette University. So, yeah, I will start with you. China has issued a new version of the negative list for foreign investment access. So, what's the significance of it, and what's the message does it send?
Right. So I think the significance of it, for one, is it helps to attract FDI into China. And at this stage, China attracts FDI not for the capital itself, but really trying to foster a more competitive environment and then also boost technological know-how and cooperation with foreign companies. So I think with this message that China is open for business, it helps to attract more foreign investors and achieve those goals. And second, I think also very importantly, I think this is not going to just be beneficial for China and also the foreign investors, but it also sends a very important signal to the rest of the world in the sense that, China is open and is continuously integrated into the world economy. And I think this is very important as the second largest economy that fully embraces open and inclusive globalization for win-win cooperation. And that is really against the backdrop of rising, protectionism and deglobalization in many parts of the world. So I think this is also very important, not just for China and also for the rest of the world as well.
So Dr. Zhou, the previous version took effect in the year 2022, and now we have this new version. So what's the change, and what are your main takeaway from this new version?
Yeah, as you mentioned, that we have just removed all the related measurements, especially for the restrictions for FDI in the manufacturing. We know that China is developing very quickly, and we have adopted the new versions of this negative list in the past several years. And according to the statistics that we started from about more than 150 items in the list, and now we can only see that less than 30. So it's a really good improvement. I think that what is more important is about it is a kind of a ratchet effect. It means that the opening up is just in one direction. We will not just turn back to trying to close our door while we open our market with a better environment and give more certainty. Like Ian mentioned, that it is not only about the details of the measurements, but a very important signal. I think the rules are really the enterprises who want to look at because their investment is looking for a longer term of decisions. And this is really important for them to know what is happening and what is going to happen in the coming years.
So Andy, this new version removes all access restrictions to manufacturing sector. And being a major manufacturing country, why is this move now? And what does it mean for China and also the foreign investors?
Well, I think from the perspective of foreign investors, this is a very positive development. We've heard some reasons already. I want to emphasize that foreign investment in manufacturing first typically involves a lot of money and it is long term. So once you've made this decision, it's fairly difficult to reverse. So Jeff Bezos, the former CEO of Amazon, talked about two kinds of decisions. One where you can walk in a door and walk back out, and others where you walk in and it's difficult and impossible to walk back out. So these kinds of investments in manufacturing are more like the ones that are very hard to walk back out of. So why this is important then is that this provides predictability and stability to foreign investors, and this is vital. And this is in stark contrast to some countries like the United States, where we see a gap between the rhetoric and the behavior, where the U.S. talks about being open for foreign investment and yet looks to ban or prohibit a Japanese investment in a major U.S. steel company. So I think this kind of disconnect is enormously negative for foreign investors, while China not only is saying the right things, but its behavior matches and is very predictable and very stable. So I think this is probably the most important aspect of what we see here.
Mm. And Dr. Zhou, so how much role does the market access play in determining whether the foreign investors will put their investment in China? And what are other factors that will be considered?
It is very important conditions for the FDI to make a decision in the first step. So if they know that there are not so many differences between their investment and China's domestic investment, they may consider about what's the next. Well, the factors are still, many of the factors like what China is now doing is not only just open the door, but also trying to, match our rules, regulations, criteria, and the international standards. So we will encourage the Chinese enterprises to meet with the international standard and requirements and criteria or routines and try to benefit the investment. For the FDI, if they come here to China, I think that there may be several different reasons. The first one is that they want to benefit by China's resources, not only for the resources of the raw materials, but also for the labor, for the infrastructure, for the support of other manufacturing. I think that is one reason why they come here and they can benefit from such an important support from that. And the second reason maybe come from the market, because in the past, many of the FDIs come to China and they invest here, they manufacture here and export to the foreign market. But now they are saying maybe Chinese domestic market is as important as the foreign markets. So they were trying to expand their businesses here and establish more branches here. And the third, I think the third factor would be something to do with the innovation, because enterprises always compete with their competitors. So they need more incentives and also supporting and also predictability about their research and development. So they will have more confidence. They can try to make a better experiments here in China and improve their competitiveness around the world.
And so why do you think in the eyes of policymakers there is a huge room for opening up the service industry?
Right. So I think for one, again, we want to have a service industry that is competitive, that is innovative, and that there are many different, service providers that could provide, high quality and affordable, services, and that could range, in many different aspects, right? So, right now, I think there are some restrictions on fully foreign-owned, for example, telecommunication. But again, gradually, these sectors, as well as, financial services and so on, are going to, open up. And that would help to really create, a very vibrant market where there are many, service providers that would try to really improve their quality of their services and, set the prices at the fair value. So that would really help to benefit, the consumers. The trend has been continuously opening up and provide more and better services through, competition and through innovations and through cooperations with the foreign investors.
And also now the domestic and foreign investments will be treated equally, which means projects open to foreign investment will be accessible to domestic private ones, while the entry thresholds for the domestic investors will also apply to foreign investors. So why do you think this equal access is important?
Right. So as I mentioned earlier, I think, again, if the goal here is not just to attract foreign investors for the money that they can bring, but really the competitive force and also, the kinds of technological know-how these foreign investors are going to bring, then we need to make sure that we have an open, fair, transparent, and competitive market environment for these foreign investors to come in. And I think, that is very important. And it's not just about market access, but also in terms of equitable treatments. And I think China is really, walking the talks. For example, there's so much discussion and debates or arguments and accusations in the US in terms of, the so-called unfair subsidies to promote, for example, EV industries. But the matter of fact is that, Tesla was able to come in China and form a fully foreign-owned company in China back in 2014. And when China hands out, EV subsidies to support EV production, and that subsidies are also going into Tesla. Unlike right now, I think in the US and European countries, where their subsidies are only limited to their own, US companies, not any other foreign businesses. And so that is really, I think, very unequal treatments that is going to disadvantage the foreign investors. So I think in terms of China, in the past, there are reasons for China to protect its domestic industries for varieties of reasons. But now I think, again, China is increasingly open, and that kind of relaxation or to provide more equal access and equal entry thresholds would really help to stimulate the competition and also innovations in China, which I think would, again, not only benefit the Chinese businesses, Chinese consumers, but also foreign investors as well.
So, Dr. Zhou, as you mentioned earlier, when the Chinese government implement more opening up policies, and it seems that the U.S. do more on sanctions against the Chinese companies and restrictions on the two-way investment. So why are those problems from the U.S. side? And what do you think is the right approach to deal with that?
Yeah, I think that maybe the different government have different philosophy about the competition, about what is fairness. Actually, I think that, from U.S. side, they obviously think that it's, beneficiary for U.S. competitors or U.S. companies to be more beneficiary by the protection. I don't think that the U.S. government are so confident about the competitiveness of its own suppliers in several manufacturing, like the EVs and also some other sectors. So they want to protect this kind of competitiveness by putting more restrictions for foreign investors and also trying to limit its so-called technology advances. But I don't think that these technologies can be improved a lot in the market where there is not enough competitiveness. So I would argue that the reason why Chinese competitors, in the EV sectors are so important because they are able to benefit from the competition. So from the philosophy of both sides, I mean that the market has some reaction, and a lot of people are trying to consume with a better quality of the EV and trying to use less money to buy them, and they also have more requirement for the further improvement. So there are some more feedback from the consumers on picking up better qualities of the products, and that is definitely a very important push for the companies to compete in a higher level. So in my understanding, I don't think this isolation of the market policies could be effective in the long term because the technology will spread. The spillover effect of the technology can encourage more companies to improve their competitiveness by the better innovation and also a way to move up to raise to the top.
So, Andy, the U.S. House of Representatives has recently passed the legislation that would blacklist the Chinese biotech companies and their U.S. subsidiaries. And the legislation would affect 5 Chinese companies to start. So what kind of problems do you think that would bring to the U.S.? And what kind of implications will this have for the global pharmaceutical industry?
Well, I think this is, again, disappointing but not surprising given the trajectory and I think the concerns that in my own view are misplaced, but still very real concerns that many American politicians have, that we see this in semiconductors, we see it in life sciences, we see it in other technology sectors as well. But I think it's very short-sighted because, like it or not, individual Americans, American businesses are very, very reliant on Chinese enterprises in the pharmaceutical area, I would say, in generally the life science area overall. So this certainly will make life more difficult for these companies that have been targeted. But in the long run, and even in the short run, I think this will only exacerbate the problems many Americans are facing with inflation, access to healthcare, affordable healthcare. And in fact, I think a wiser policy would be to work with Chinese companies, whether that's a Huawei, a BYD, or these companies that have now been targeted. And that actually would be better for American consumers and probably even better politically for these American politicians.
Well, we're speaking with Andy Mark, Senior Research Fellow at the Center for China and Globalization, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, we'll take a look at China's top 500 enterprises. Stay with us. You're listening to Biz Today. I'm Zhao Yang in Beijing. China's top 500 enterprises post steady performances with rising revenues and a greater focus on innovation. According to the new list of top 500 Chinese enterprises, the largest companies generated a total revenue of 110 trillion yuan, or over 15 trillion US dollars last year. The revenue threshold for entry on this year's list is 47.4 billion yuan, and this is also up from the previous year. So first of all, Yan, so what are the new features of China's top 500 enterprises, and which companies on the list are most impressive to you?
Right. So I think there are three main features now for this top 500. So first of all, we know that there's 16 companies that they have the revenues that exceed the trillion yuan's mark. So now to be in the top 500, the threshold has increased to now 47 billion yuan, or about $6.6 billion. So in other words, there has been a growth in scale of Chinese companies. And second is, I think, very interestingly to see the composition of those companies that sit on the top 500. So we have seen a rising number of advanced manufacturing and modern services enterprises now are in the top 500, and you see fewer, real estate companies, for example. And the number of the companies in sectors like new energy equipment, power storage batteries, communication equipment, and semiconductor manufacturing have increased, from 18 of them to now 31 in the past 5 years. So we are seeing, these tech companies, these very innovative companies are now in these very large scale companies list, right? And they become really sort of the national champion and also profitable to be in that list. And third, I think, it's very interesting to see, how many these companies that are spending so much on their R&D. The total spending on R&D of these top 500 companies reached 1.81 trillion yuan, which is about 15% increase from last year. So again, just to double down on this fact that these companies are growing bigger and more profitable because they are really spending and innovating on research and development. And they also hold a total of 2.03 million effective patents. And that also is a 7.7% growth from 5 years ago. So all of these just indicate that, now I think the Chinese business landscape has really transformed a lot. Companies are getting bigger, more successful, and they're also very much driven by innovation and technological growth, and supported by these kinds of innovations and R&D spending.
So Andy, so for R&D and for greater focus on innovation, we have to mention China's tech giant Huawei. So how do you assess the company's innovation capability, and what about its R&D intensity?
Well, I think Huawei is very well known as a technology leader globally, and that is precisely because I think of its R&D intensity. So it invests an enormous amount of revenue. I think upwards of 20% of revenue in R&D, with more than half of its employees engaged in R&D. So I think this is a very simple answer, and we've seen the results from their latest trifold phone to leadership in other areas, cloud computing, et cetera. So certainly, I think no surprises here, Zhaoyang.
So Huawei has just launched its new smartphone and already had over 3 million pre-orders. So what does that say about Huawei's competitiveness in the smartphone market?
Right. I think Huawei has been really the leading producer and also researcher, right, in the smartphone business in this industry. So when you look at this new phone, Mate XT, it's featured, three-fold phones. It has a huge display screen, 10.2 inch, and it also is very thin. It's the world's slimmest foldable phone with only 3.6 millimeter wide. And so just in terms of the software, the hardware, I think it's already a blast to the market. As you mentioned, that there's so many pre-orders. Actually, Reuters said that they actually have 4 million pre-orders. But give and take, it's going to be very popular. Even though the price tag right now is relatively high, it's about $2,800, which is way more expensive than for example, iPhone 16 Pro, which it's relatively large, but it's not trifold. But anyway, I think in terms of the hardware, it is quite I think a blast in terms of technology. But also, I think, not to mention, some of the software side, right, that it's featured with AI assistant, with text summary, translation, editing functions, also AI boosted image editing functions. So, for people who like to use their phone and take pictures, they're going to get really good features from this phone. Also, all these AI functions are supported by Huawei's in-house Keeling chips. So I think this is really a showcase, right, of the leading edge technology that Huawei is able to perform, to able to advance the market despite all the sanctions. Now, compared to Apple, on the other hand, its iPhone 16 in China is not having this AI assistant features because they have not yet have an AI partner in China. So I think that really puts Apple phone in a much disadvantaged position compared to Huawei and other some homegrown phones. So I think that it's really showing how Huawei is advancing. And in terms of foldable smartphones, Huawei now is really the leader in the market, and it occupies 42% of the foldable phones market share in China, ahead of some other homegrown brands. So I think, yes, in sum, I think, this is really a very interesting breakthrough. And I think, there's really just a lot of potential going forward.
So Andy, Huawei has made a comeback in the smartphone industry despite the U.S. sanctions. So how did the company make it?
Well, I think there are two main reasons, Zhaoyang. So first of all, I think it's the business philosophy of the founder, Ren Zhengfei, who believes in sharing the gains with all of the employees at Huawei. And I think this has built a tremendous sense of solidarity and commitment, which is absolutely necessary. And then I think it's also the resourcefulness and the determination after the unprecedented sanctions that the U.S. government placed on Huawei. And again, think of this as a private company being attacked by the government of one of the most powerful countries in the world, that it had the determination to replace almost all of the American technology and components, and came back stronger than ever in the smartphone market, while at the same time building very successful businesses in areas like cloud computing, in the electric vehicle autonomous driving space as well, which were relatively insulated from these American attacks. I think it's two things. It's the philosophy and culture of the company and its relentless focus on replacing American technology and components. And John, if I may, because you asked Yan about other companies that are impressive, I'd like to share one that is related to Huawei, and that it's in the technology space, but maybe not so directly so. And this is State Grid, which is one of the top 10 companies globally, with more than $500 billion in revenue, serving almost every person in China. But why does this matter? Because with artificial intelligence, electric power production is vital. So I think this is a very important company that, to me, is impressive, and of course has a very important role to play in China's digitization and AI strategy of so-called Eastern data, Western compute, meaning building a lot of the data centers in the western part of the country to serve the data generating parts of the country, whether these are consumers or businesses in the eastern part of China, but without sufficient, reliable, and environmentally sustainable power production, this will not be possible. So to me, I think State Grid is a company that is impressive, but maybe not too many people are paying a lot of attention to yet.
Well, we're speaking with Andy Marks, Senior Research Fellow at the Center for China and Globalization, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.